Hello and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is June 17th, 2020, and we're going to go through some headlines like we do on a daily basis. But I want to let you know that we're continued to our commitment, which is our belief is information is power. Our goal is to provide our clients, friends, and family with real-time and relevant market-related information. Our process creates a smart and purposeful financial decisions that improve your life, your family, and your community that you care so much about. So let's get right into our headlines for today. My first topic of the day, again, I keep bringing to the forefront, which is US-China relations. You may not see this being reported in the headlines. This is something that is very critical to sort of our US economy and our global economy and how the US and China proceed. And I keep bringing to the forefront the fact of watch the actions, not the rhetoric, or not the words or the headlines, if you will. And today we actually might see something that is a very positive development. The U.S. Secretary of State Mike Pompeo is to meet with China's top diplomat in Hawaii. So if that happens, it would be the first high-level U.S.-China meeting since the signing of Phase 1 trade deal in January. It would also show that the U.S. is opting to settle its disputes with China through dialogue rather than straight talk, tough talk and actions. This is reported by the Wall Street Journal. So this is very critical. We want to make certain that this Wednesday meeting happens in Hawaii, and we want to pay attention to sort of the outcome. But just the symbolic gesture of both parties meeting together face to face, first since the trade deal has been signed, is very different than what the headlines have had you believe up until this point. So it's important, and that's what markets are paying attention to. So that's why we continue to watch this development, as it's very constructive and very positive. My next topic is don't fall for clickbait headlines. What I mean by that, well, I just referred to it in my last topic, which was the headlines are negative on US-China relations. They get you to click it, right? They want you to read that story. And then if you actually read the story, it actually is a little bit different than the headline, right? Or the coronavirus second wave. Well, we're not in a second wave. We haven't gotten out of the first wave. But what has happened as it relates to COVID-19 is we know one thing is a constant. The headlines will continue to be negative, and therefore you're going to have to click them. Now, we don't know what we don't know as it relates to this virus and how it's moving around states that have reopened. But it's just interesting to see that there are other countries and there are other places around the world that are ahead of us with regards to this virus. And therefore, there is a resurgence in COVID cases when we reopen, and we've seen that around the world. However, the trend around the world has still been predominantly on the downslope. And I think that's what the markets are paying attention to. We have a lot more science and medical community that has been able to sort of gear up for this. That was sort of why we had to stay at home, is so that the medical community can get their hands around this virus. But more importantly, now that we go out safely, we do the masks and all the other stuff that we need to do, but we're doing it properly. I don't imagine us going back to the resurgence of the original first wave. It just doesn't seem, from a common sense standpoint, again, I'm not a medical person, but it would be hard to repeat that first initial surge now that we know what we know, right? We have medical field is already geared up. We have people around the world, all the science and technology around the world working on vaccines and therapeutics. So it just seems to be that, yes, it's natural that we do have a little bump in the first wave. Hopefully it doesn't continue to get out of control. But if it follows the pattern around the world of other countries that are ahead of us, then I think that's what the markets are paying attention to. If this was really a huge second wave outbreak, because the data is there now. We didn't have the data before, but the market is paying attention to the data that's there. Again, it's still very serious. We still have to take it seriously personally to protect our friends and family and everyone that we care about. However, the markets are paying attention to the data that we now have, and I think that's important. So I'm bringing that to the forefront. Don't fall for the clickbait. Go into the actual data, empirical evidence that's out there now that we have it on all facets. My final topic of the day is Powell rules out negative interest rates for the United States. This is the most significant thing he said in his 2-day testimony yesterday when he reported to Congress, specifically Senate. He said that they are studying all aspects, including negative rates, including yield curve control, but they're studying those and what those effects have done in monetary policy around the world. But today in front of the House, he said something very significant where he rules that out, negative interest rates for the United States. And ultimately what that means for us is that you have your money in the bank account right now. And right now, the banks aren't paying us anything on our money from an interest rate standpoint. So there's no savings interest on our money that's in the banks. However, if they go negative, you would lose money. Meaning if the interest rate went negative, you would actually have to pay the bank for keeping your money in the banking system. It's crazy. It's crazy. Europe countries have already done it. There's Germany and a few others. They've already gone negative several times, as most as the past summer, if you will. And they're revisiting that again as we're going through this global pandemic. It would be devastating for the United States here for us to do that for our banking systems. So it's good that the Federal Reserve Chairman says that's not an option. Of course, if anything ever got worse, it could be an option. It's a tool that the Federal Reserve has the ability to use. But at this point in time, he basically says he's ruling that out for the United States, which is a very positive and healthy sign. It also indicates that there's traction in the economy going forward, that the U.S. will recover. But we're seeing that through the markets, we're seeing that through interest rates, and we also get the confidence that the Federal Reserve Chairman is ruling that out. So that's my update for today. Thanks for listening. And again, if there's somebody that you know that you want to share this to, or share it on Facebook, or like and subscribe, we appreciate it. And have a great day. Take care.